Hello everyone and welcome to a new video. In this one we're going to go over the EMA crossover strategy, the most popular strategy in a whole trading community and a one that I often use as an example of a trading bot or a trading strategy. In this video we're going to go over how we implemented it, what all features we added to it and how it works. If you want to know more about that, then stay tuned. As usual, if you want to learn more about tradersmarket.io and all the trading bots that we develop, like the EMA crossover trading bot and many others that actually outperform it, and all the trading tools we have, then check it out. There's going to be a link in the description, as well as the link to the free MT5 automation masterclass. That masterclass is all about MetaTrader, EAs, trading bots, indicators, and everything you need to know in order to automate your trading. So if you want to check it out, there's going to be a link in the description. So let's start with the EMA crossover strategy. Before we dive into the crossover, let's first see what is an EMA and why is it called like this. So EMA is short for exponential moving average, and this is the most popular moving average there is. It is an indicator, so it's basically this line, and it is calculated based on a specific formula. Now, as you can see, there are many different versions of this moving average, and now we're going to go over each one of them. So the moving average means that it is averaging the movement of the price. So it is averaging how price moves up or down, and it gives you a better look on the long-term movement. So there are a couple of popular ones. First is the simple, and simple moving average means that it just takes the sum of prices and divides it by the number of candles. So let's say right here we want to know what is the value of this. So let's say the SMA has the period of 5. Here it will have much bigger, but let's say it has a period of 5. That means that it's going to take last 5 candles. So it's going to be this one. So it's taking closes. Let me take this. So it's taking closes. So it means this, plus this, and then 2 more, this and this. And it is going to take all these values to sum them. Okay, so sum of all the prices, and it's going to divide them by 5 because the period is 5. We took 5 prices, added them up. Now we need to divide by 5. And we're going to get some average, which is probably somewhere here. So it's going to be around here. As you can see, the line is here, which means it's a longer period moving average, but this is how the logic works. So this is the simple moving average. And why is it simple? Well, because the formula is the simplest one. It just adds up the prices and then divides it. Is it used? Yes, it is also one of the most popular ones with the exponential one. Now let's see what is the difference between the exponential and the simple moving average. So the exponential moving average is actually giving more weight to the recent prices. So what does this mean? It has a more complex formula. We're not going to go over it, but basically if we would be looking, let's say, at this candle, I think this is the same as on the chart before, it would give more weight to this, and then a bit less to this, and then a bit less to this, and a bit less here, and a bit less here. So it would not really be an average which is here, but it would be a little higher because recent moves have been up. So this is the difference. Again, the formula is a bit more complex and it would not be easy to calculate it. But the point of this exponential moving average is that it reacts to price differences and price movements faster. So it's more reactive. It gives you more, it gives you faster signals. So for example, if you're trading some lower time frames and you want to react to prices faster, then you would potentially be using the exponential moving average. Again, it is very widely used, and I would say it is the most popular one, because when I say it gives more weight to the recent prices, it doesn't mean that it is that there is a crazy difference to the simple moving average. Okay, so they're very similar one to another, and I would say the exponential one is the most widely used and the one you will be using the most. This is why we basically call the strategy EMA crossover, and this is how we have it on our website also. Now, the third one that is kind of popular is the weighted moving average. And this one is, again, a bit more sensitive than the exponential one. It assigns weighted importance to newer prices, so it's like a customization of the exponential moving average. Again, it is used in some strategies where you want to react to prices even quicker. It is popular, kind of popular, like you're gonna hear about it, but to be honest, we never used it, and I don't see many traders using this either. There is also the smoothed moving average and the whole moving average, where this one tries to smoothen the price while the whole is actually trying to react as fast as possible. So again, these two just exist. I've never seen anyone use them. So the most popular ones are the simple moving average and the exponential moving average. Now let's see what is this crossover all about, and let's also explain why the crossover makes sense and why people would be trading it. So when we talk about the crossover, it's always between two moving averages, either they're simple or exponential or any version, and there is the slow one and the fast one. So the slow one will have a greater period, meaning, let's say the period can be period of 200, which is a very popular one. And this means that it will take 200 candles to calculate the price. And let's say the fast one is a period of 50. This is also the popular setup. This means this one is gonna get 50 candles, last 50 candles to calculate the price. So if you're watching here, let's say before this happened, price of this, the slow one, was calculated by taking, let's say here it was 200 candles, and the fast one, the red one, was calculated using like the quarter, so this many candles, so this right here. So as you can see, if you have greater period, as we saw like in the last example, that means that you're reacting slower to the price changes, because let's say price shoots up or down, that matters less because we are adding that price plus 199 prices before that. So any move is going to be divided by 200, so like it's going to react less to the price movements, like the moving average is going to react less. When it's 50, it reacts more. When it would be, let's say, if it would be 10, then it will react even more. The most reactive would be period of 1, which would basically be following the closing price of an asset. So this is why the crossover means, so let's try to interpret this. So the crossover between the fast and the slow moving average means that short-term price is going, let's say in this example, this is a buy scenario. So short-term, we see the fast is moving up while the slow was moving down or being stable, whatever, meaning that there is the change in the regime or in the trend. Because the faster one, the one that follows the price, says we are going up, and the slow one is like, well, according to bigger history, we were not going up that much, which means there is a shift in the trend, which is why this is the most popular trend following strategy. Because let's say prices were moving, in a consolidation, the slow would be like that, the fast would be like that also, but then if prices move up, it would cross it and then continue upwards, which is a start of a new trend. So this is why this moving average crossover is so popular and why it actually makes sense, because the underlying trend was one, like down, and then the smaller trend, which the fast one is picking up, is up, so it crosses it upwards, and and hopefully the price continues to go up. You enter the trade right here and you get some profits. Vice versa, the sell means that the fast one is crossing the slow one to the downside. Right here you enter a sell, and again, as we said, hopefully you're gonna take some profits down the line. And now that we explained the strategy, let's get into the strategy tester in MetaTrader5, see some trades, see some features that we added to the crossover, and backtest it. So now we're in the strategy tester in MetaTrader5, and we're gonna test we called it SMA because it's like simple moving average trading bot. If you go to inputs, you're gonna see all these parameters. We're not going to go over each one of these because there are many of them which are standard features for all of our trading bots. And there's a video down below which explains all the features of all of our trading bots, how we make them super customizable, that every trader can feel almost like they coded this bot themselves, like ATR-based stop loss, trailing stop loss, session filter, daily profit loss limit for prop firm challenges, signal confirmation like price action, like engulfing, spin bars, and much more stuff like that. Okay, risk to reward, risk percentage, etc. The parameters that we're going to go over are the indicator-based parameters. So first is the time frame. The time frame you can pick, it will trade on that time frame. So the indicator is calculated based on the candles. Candles are of a specific time frame, so you can pick the time frame right here, which will change the values for the moving averages. Then you can pick here which one you want. Again, we're using exponential most of the time. And you can pick the periods for the faster and the slower moving average. So the one we picked here are 30 and 140. We're using the standard 2% risk. This is something we never optimized for. This is just something that is like that. And risk reward is 1 to 5, which means we risk, let's say 2%. If we win, we're gonna win 10%. So because it's 1 to 5, 2 times 5 is 10. So now we're gonna start the backtest in this visual mode. So hopefully we can see some trades being taken and how does it work. So we're gonna hit start and let's see what happens. So we're gonna lower this so we make sure it's gonna open trades a bit slower and we are gonna be able to see them. Okay, so as you can see here, it is displaying all the indicators that we're using. There are two EMAs, okay, and there is the ATR. So these are the indicators that we use. Let's make this a bit faster. So if you see that it doesn't take trades somewhere, then it means it was out of the trading session. So this is something that you should take into account, or maybe you just disable that option and you trade every time. Also, another confirmation type that we have is, okay, so there was a trade right here. It was a sell. So if we zoom in right here, okay. One more thing is that if you, again, don't see your trades being opened, take into account all the confirmations that you requested. For example, I think here we request engulfing as confirmation candle. Right here, there is the bearish engulfing, and here is the sell signal from the crossover. So we did the sell here. I think this was a loser, yeah, as you can see here. So let's keep going. Okay, so you can see right here again, we opened the sell, and right here we took it out at a break even. I think the trailing stop has been added. So yeah, the trailing stop has been added. So this is the reason why we canceled it out at break even. Let's keep going. Okay, so here's another trade. There was this buy setup. We had an engulfing. We had even an engulfing here, but as you can see right here, it was a buy, and it even trailed the price. So SL is now in profit. So we can keep going with it. Now it got stopped out, but it was a profitable trade, which you should be able to see somewhere here. Okay, so here you cannot see profit, but nevertheless, as you can see, it was a profitable trade. Yeah, let's go a bit further and hopefully get some more trades. Okay, another sell happening right here. This is the sell signal, and here is the stop loss. This hit the SL. Yeah, and now I'm just gonna let it go through the whole year and show you the results. Okay, so as you can see, the backtest has finished. The total net profit was around 12% over years. So there were a lot of losses and wins with this parameter set again. And then as in the second half of the year, the pair got a lot more trending. So we were having profitable trades mostly. So this would basically be it. If you have access to this trading bot, you can basically do the same. You can optimize it, you can run it, you can change these parameters. Again, you can use history and optimize this. We have completely separate video for how to optimize, how to use this strategy tester, etc. I hope that this explanation was interesting and valuable. We want to be as transparent as possible with all the trading bots that we make, and we'll make sure to do this same video for each one of our trading bots. So if you liked it, then like and subscribe to the channel, and see you in the next video. Until then, if you want to check out all the work we do at tradersmarket.io, click the link below. Thank you very much and see you.